Good morning, everyone, and welcome back to the Wilson Weekly. Good morning, Doc. It's a pleasure as always. How are you?
Yeah, pleasure to be with you again, Graeme. Happy August. Here we are.
Yeah.
One more month, and we're into spring. So we've got through 2/3 of the winter, and really, where's the winter selling season gone?
I was about to say, Doc, if we're nearly into spring, which is the spring selling boom season, winter hasn't. I haven't seen this seasonal market that we usually feel through winter.
No, it's been a very positive market over the past 2 months, Graeme. The usual slowdown, a little bit of a slowdown, and that's mainly because of the proportion of higher priced properties are always lower during the winter months. But, prices are still growing. We're going to look at the latest prices for home prices for July, still in the black. Prices are still rising, not quite as quickly as they did over the June quarter. But again, that's just the impact we expect through the winter months. And it's continues to be a very positive market. And of course, we'll look at the latest auction results, and they're just validating what we're saying, that it's really been a, what winter type of, past 2 months. And we've had some real surprises, particularly in the auction market where, interestingly, Graeme, volumes are up. So sellers are actually, I guess they're sniffing the wind to some degree and thinking, hey, not a bad time to get into the market now. Plenty of buyers around. So, been a very positive period over July. And we'll look at those latest results. But, of course, the big news, Graeme, was the meeting, the monthly meeting of the Reserve Bank yesterday. And, I was interested.
Do we have a drum roll here?
Yeah, a bit of a drum roll. I do the Finder survey. I've been doing that for a few years, and they survey a number of, I guess, talking heads in the business. But I was interested to see their results that over 70% actually predicted that rates would pause. And I was one that, because I'm just going on the data, and we'll explain that, I guess, when we get into it. But over 70% predicted they would pause. And yes, they did pause. And that's 2 months in a row, Graeme, for pauses.
I can't see the justification in the data.
Well, we're not complaining, Graeme. I mean, it's good news. In the short term, it's really good news for mortgagees, for those that have a mortgage, that we've had 2 months in a row, and for the housing market, because it just will continue to fuel confidence going forward, particularly as we've just discussed that we're only 4 weeks away from the spring selling season, Graeme, which will actually start to ramp up in the next couple of weeks as we normally see the first shoots of spring coming through over the final weeks of August. So yes, rates on hold, but and we'll go through perhaps some of the reasoning and some of the statements that were made. But perhaps our current governor wants to go out with everybody loving him. You know what I'm saying? So,
yeah, we should have kept him.
Yeah, it's like, what do I care?
Yeah.
Let's keep everybody happy. But I'm not so sure the battle against inflation is anywhere near won. But, we'll have a look at the data. And as we always do, Graeme, we can only go on the data here. We're not guessing anything. We're not looking for a cheap headline or whatever. We're not looking to make friends. And we just rely on the evidence. And of course, the historical evidence is part of that. But the data coming through is what I guess we are guided by. And it's been really, July was another very strong month for our economy with the data that did come through, with maybe a few exceptions, but we'll have a look at that when we get into the presentation.
Absolutely, Doc. Well, let's rip in to see what's actually going on, because I'm a bit confused at some of these decisions lately.
Well, you're not the only one, Graeme. Confusion is reigning. But, my housing market's put together the latest data for this week, just adding to that revivalist sentiment that is in our housing markets. It's continued now for most of the year, and shows no sign of, maybe easing, but not really slowing down. And as we said, rates paused again for now. And this is the point, that, we'll get a pause. But my concern is that if we don't continue to tackle inflation, which is clearly still too high, that we may have to go a little bit harder later on,
Mm.
But let's make no mistake, this is good news for mortgage holders. It's good news for the housing market because, if we're still getting incomes increasing at, probably when we get the latest data, will show that upwards of 4% a year annualized, then we've still got those offsets for higher rates. So we're getting increased interest rates, increased income, higher house prices, and yet our interest rates are staying the same, now 2 months in a row. So it's a real trend that's evolving. And the interesting thing is that it's actually not following what's happening overseas, Graeme, because we did see the US raise rates last week. Or over July. And we're also seeing other jurisdictions putting up their rates as well. So Australia's a bit of an outlier here. And the interesting thing is that our inflation is actually higher than overseas inflation generally, particularly the US and the Eurozone, or the US particularly. So the RBA, as we've discussed, has left rates on hold again over August, consecutive months now with rates on hold. As we've discussed, Graeme, there's no real economic justification for that pause in the latest data, with our economy still performing strongly.
Yeah, Doc, I think it's a bit interesting that we've got a situation where unemployment's still ridiculously low. We've got a situation where everyone that wants a job's got a job. People are getting pay rises left, right, and centre, and inflation's not yet under control. Yet we seem to be pausing. So I can't understand it, to be honest. I mean, I'm not complaining for people that are renting or with a mortgage, but I can't understand it.
I mean, the point is, Graeme, is there a little bit of touchy-feely going on here? It's about, okay, well, the data might not be supporting our decisions per se, but we feel that we don't want to go too hard and, put the economy under any stress.
Yeah, fair enough.
So we can see the trend there with the latest decision now flattening out 2 in a row. So certainly a bit of a surprise, I guess, considering where we thought we'd be, given all those interest rate rises we've had over the past year. But look, good news. Maybe the cycle is now peaking, but I think there's still some work to be done going forward. But as I said, let's not be too narky about this. I think it's good news, and we await the data as it comes through.
Yeah, and I think people have got to take an approach, Doc, that if you take out a 30-year home loan at 5%, your rate will not be 5% over 30 years. I think it's really surefire time people understand that it's going to be up and down and somewhere in between over the duration of the loan they should be prepared for.
And the Reserve Bank has said in its statement with the decision, Graeme, that although inflation is declining, it's still too high at 6%. And although goods inflation has eased, prices for services are rising briskly. And of course, as we know, rent inflation is also increasing. The recent data, they believe, is consistent with returning inflation to the target range. But there are significant uncertainties remaining, and that may mean that further tightening will be required because they're still committed to pulling inflation down. And I think one of the issues that we have, and we'll look at some of the key data points, Graeme, for inflation, because we've had the June inflation numbers released. We saw the headline inflation rate fall again, down to 5.4%. And that followed a fall the previous month from 6.8 to 5.6. Underlying inflation, which excludes those volatile elements, fell from 6.4 to 6%. But of course, as the Reserve Bank has said, that's still double what the target is. But the significant contributors to inflation were particularly houses, with house prices falling, with oil prices falling as well. I think one of the problems we have going forward, Graeme, with the inflation data is we're now starting to see the price of oil increasing. You've probably noticed that at the petrol pump.
Yep.
With petrol prices rising. But yeah, we've had a real breakout with the US dollar per barrel price of oil going above $80 now. So a real break upwards in the series after it looked like we were heading down. And of course, that's not good news for inflation. And as we know, Graeme, the real drop in the inflation rate has been a factor primarily of the fall in oil. You can see how it's come down from a year ago. Once we start picking up again, it'll start to fuel inflation. And the other factors have been obviously the adjustment with our goods inflation as we've moved out of COVID. So still some concerns there with strong increases in the price of oil recently. So we need to watch that one. So as I mentioned, Graeme, the labour market is still booming, record low unemployment rate, jobs up over May, following the rise over May, up again over June. Unemployment down. The participation rate is down slightly, but still at a record high. And all our states and capitals are still reporting very low unemployment rates. So if higher rates were supposed to, ease economic activity and reduce and act as an impetus to reduce spending and demand in the economy, it just hasn't worked, mate. So there's nothing here. There's nothing here that's you can hang your hat on in terms of the real economy, and that's the labour market. That interest rates are slowing things down, but another pause. So that's good news.
It's booming, and I tell you what, we're still spending like bloody drunken sailors. So,
well, this is the issue, and I mean the Reserve Bank are concerned. I suppose they think that there are maybe that interest rates have worked and they can't see it working yet because there's a lagged effect. But there's really no even early signs emerging in our labour market because it's just roaring along still. So, the capitals are still low. Look at that Sydney unemployment rate, Graeme. Just 3%. No surprise how strong that Sydney market is with that low unemployment rate.
Yeah.
We did have a fall in retail sales, which sort of offset the rise that we had in over May. They were the June sales. But retail sales, Graeme, is still up by 4.2% over the year. A bit strange. The ABS said that they blamed weaker than usual spending on end-of-year financial sales in June for the lower result. And they said there was extra discounting and promotional activity in May. And that's the difference in the two results. I don't buy that, to be quite honest.
That's like saying you're not happy with the result, so you say it's because of the previous result that it's affected. Anyway, some of the crap coming out of this.
I just think it's a little bit of a slippery slope in terms of trying to rationalise what is a strange result. But as we've discussed here quite regularly, I think that there are some issues with the seasonal adjustment model that the ABS are using as a result of COVID. It's going to take some time for that to sort of normalise itself. Because, of course, seasonal adjustment is a long-term model scenario that's based on sort of what's happened over the past couple of years. So, but I guess maybe if the Reserve Bank wanted to justify its rate pause, it could say, well, there was some reduced spending over June. But again, I'd put a bit of a question mark there. But nonetheless, it does, I guess, reinforce their statements about some signs of reduced spending. And you can see there that even though there was that slight easing, it's still well ahead of where it was a year ago. And significantly ahead of where we were pre-COVID, Graeme. And that's, all about those stimulus packages still sort of working. Wages, as we see, still rising, fastest rate in 10 years. We'll get the latest data on wage growth out soon. And it'll be interesting to see if we do get to 4%. I think we'll get very close to 4% wages growth, but we'll wait for the next couple of weeks. Another thing for inflation, Graeme, of course, is house building costs. Now, even there it said that they were falling. Well, they're not falling. They're just not rising at the same rate as they had and have been previously. And that's been a big factor in why Australian inflation has been higher than other similar countries. And you can see how we went through the roof in terms of building costs following the stimulus package for home builder from the previous government. Just starting to ease now, Graeme, which is good news. But as we can see there, that the rate of annual growth of house building costs is declining, but it's still, over double figures per year. And a significant factor still in inflation, but nonetheless, it is improving, Graeme.
Yep.
So as we promised, the latest house prices, good news again. We've seen the national housing market. National house prices have risen for the sixth consecutive quarter, Graeme, over July. So no sign really of any downturn in the market approaching us. The rate of growth was lower than over the June quarter, but no surprise given, as we discussed, the impacts of the typically quieter winter selling season, but not a real big impact, Graeme, still growing there. So you can really see that sort of U-shaped recovery or V-shaped recovery, Graeme, that's happened in our markets, and, very encouraging. In fact, Graeme, it's interesting now that the national median house price is now tracking higher than where it was a year ago. So we're now higher than where we were a year ago. And as prices continue to increase, that does act to moderate the cycle in a sense, because it does start to sideline buyers, because affordability issues start to constrain growth. When we look at the breakdown, Melbourne and Sydney showing the signs of that winter market, although they increased, the increases weren't as substantial as over the previous quarterly month, the June quarter. But Brisbane up 2.3%, Graeme, over the month. Wow. When we look at the annual figures, Sydney's up by 7.7% so far this year.
We might see a double figure, Doc, by the end of their 12 or a 14 or a...
Yeah, I think we'll get 10, Graeme. Let's not get too carried away, but I even think 10 is sort of a conservative estimate based on that. We've gone through 7 months of the year when we're up nearly 8%. And we've got the spring selling season to come, and we've got a pause in interest rates, Graeme.
Yep.
And we've still got a booming economy. So positive results again over July. All the capital city markets, with the exception of Canberra, with the exception of Darwin and Hobart, recorded increases. And I think it's interesting, Graeme, that in Sydney particularly, we're now within reaching distance, I suppose, the next month or two of getting back to peak prices. So it's been a very strong revival in the market this year and continuing on despite winter. Same for units. Units also increased. The median unit price also increased for the sixth consecutive month, and unit prices are also higher than where they were a year ago.
There you go.
And again, Brisbane and Adelaide led the charge over the month, as they have over the past year, for unit prices. So no sign of a winter, I guess, decline in prices, but certainly some easing in growth rates, but still a very positive market going forward, Graeme. And of course, as usual, we have our QR code there for those that want to download the full report for the July housing market.
Thank you.
And just finishing off, Graeme, with our auction market update. This really does reinforce the strength of the winter market, Graeme. Another big weekend of auctions. I mean, these are big numbers, Graeme, for July. Over 600 auctions in Sydney, again higher than the weekend before. 700 auctions in Melbourne, Graeme. And we've got to understand this is a holiday month still, July. And we're getting, more sellers coming into the market. And I think that just reinforces the positivity and the confidence now that generally, markets have. Now, despite that surge in auction numbers, we still had strong clearance rates. Look at these clearance rates, Graeme. 76% in Sydney, nearly 76% in Melbourne. Now, they're clearly reflecting a seller's market. So no wonder we're getting more sellers coming into the market, despite the fact that this is, the pause period of the year. So, and the result of all that, of course, is that, we've just had a modest decline in activity, but still high in Sydney with the monthly clearance rates there. Still tracking well above 70%. Same story in Melbourne, and well above where they were a year ago, Graeme. Brisbane market also higher than where it was a year ago. We have seen a real strengthening of that Brisbane market, and now continuing to produce those results, which are really quite different to what we normally expect with the Brisbane market. We know the Brisbane market's strong once we do start to see clearance rates above 50, 55%. So more good results there for Brisbane. Adelaide remains its usual 80% plus results, and well ahead of where it was a year ago. And even the Canberra market has picked up on the back of a strengthening Sydney market, Graeme. Of course, you can get those auction clearance rate data every Saturday night for the Capital City snapshot, and on Sundays we have the full national report with the Melbourne and Sydney regional breakdowns. And we also include all the top sales, top 10 sales, auction sales from all the capital cities on the Saturday. So a good resource there, Graeme, for those that are wanting to look a little bit deeper into the market. And as we're always promoting, Graeme, we have our My Housing Market house price app, which is a really good indicator of what's happening in our housing markets on a suburb-by-suburb basis nationally. And, of course, you can also filter that for townhouses, for houses, for units, and also filter it for the number of bedrooms. So and it does give you a median price, a high price, a low price, and the number of listings also. So you can do that for rents and you can do that for asking prices. So it's a very good real-time indication of what's happening in the market, Graeme.
And it's greatly appreciated.
Yes, and it is exclusive, of course, through Infinity. So if you want to get a look at that one, you can get the link there, but you'll have to get the password from Graeme. So, look out for that one. But it's a great little app, and stay tuned for some more similar types of products, Graeme.
Much appreciated, Doc. But next week, we've got the July rent report, home building approvals, home building commencements, which is important from approvals to commencements. We've got home loan data. We're going to have the latest weekend auction results as always. And for those that are tuning in that perhaps aren't part of the Infinity family but are listening to Doc and I each week, that app that Doc has built and given exclusive access to, we do have a password for, but it is in our private Facebook group. And only our community is in there for active clients. So sorry, not sorry, but we do appreciate that, Doc, from you for our community, and look forward to seeing what we have to go through next week.
Yeah, it'll be another big week, and the rent report will be interesting, Graeme, because we've, if you remember, we had a little bit of better news for tenants over June, but just to give you a bit of a heads up, that good news won't be as good for July. So we'll reveal next week. Been a bit croaky this week, Graeme, but we got through it, Doc. And we'll be on all 8 cylinders next week, I'm sure.
I think you'll be on 12. You're a V12, Doc, so we'll let you get some rest and we'll see you next week. Thanks as always.
Yeah, good on you, Graeme. Thanks again.